All right, so we're diving into investing today.
We are.
And we've got this whole stack of information to go through.
Yeah, we do.
But you know what's interesting? One of the first things that our sources all point to is figuring out your why.
Right.
Like before you even pick stocks or bonds or any of that.
Absolutely.
It's like, what are you investing for?
It's the foundation.
Yeah.
Really?
So how does
Cool.
that change things?
Right.
Like, knowing my goals,
Okay, so
how's that going to impact how I actually invest?
I think a good analogy is like building a house, right?
Okay.
You don't just start, throwing up walls.
You got to have a plan.
You got to have blueprint.
Yeah.
You got to know what you're building.
Yeah. Same thing with investing.
I guess it's easy to get caught up
Oh, yeah.
in all the excitement of it.
Yeah.
Just jump right in.
Yeah. You want to get started.
But having that big picture in mind,
Right.
that why?
Exactly.
So walk me through that a little bit.
Yeah.
Like, how does knowing if I'm investing for, say, retirement versus, I don't know, a down payment on a house.
Right.
How does that actually change my strategy?
So those are two very different goals, right?
Yeah.
One is
Totally.
retirement's decades away.
Right, exactly.
Okay.
And a down payment on a house, maybe that's a few years.
Yeah, more short term.
Yeah. So with retirement, you've got time,
To ride the
ride the ups and downs of the market.
Yeah. And, weather any storms.
Exactly.
Yeah.
But a house.
Yeah. If you need that money in 3 years,
Yeah, you don't want it to all disappear.
you don't want to risk it.
Right.
Right.
So a shorter time frame means you might be taking
Little risk, yeah.
a more conservative approach. Yeah.
That's right.
Okay, and I bet risk tolerance plays into this whole thing too, right?
Absolutely.
It's a huge part of it.
Yeah, some people are comfortable seeing those big swings.
Exactly.
Other people, not so much.
Right. Some people are okay with seeing their account go down,
Yeah.
20% in a year.
And they're like, oh, it'll come back up.
Yeah, they're in it for the long haul.
Yeah.
Other people are like, I can't sleep at night.
Exactly.
That's too much stress.
Yeah.
So that's your risk tolerance.
Okay, so you think about your goals,
Uh-huh.
you think about your time frame,
Right.
and how much risk you can stomach.
You got it.
And then what?
Then you start looking at accounts
Okay.
because there are different kinds,
there are different types of accounts.
different types. Yeah.
All right, so break those down for me.
Okay, so our sources
Mm-hmm.
talk about three main ones:
Okay.
brokerage accounts, retirement accounts,
Okay.
and IRAs.
Okay, cool.
Yeah.
So let's start with a brokerage account.
Okay.
Because that seems like, I don't know, maybe the most straightforward,
Yeah, they are pretty simple.
like just go in, open it, start investing. Is that kind of how it works?
Pretty much.
Okay.
Yeah, it's like you're 18,
Mhm.
you open one, and you can invest in pretty much anything.
Okay.
Stocks, bonds, you name it.
A lot of flexibility there.
A lot of flexibility, yeah.
Okay.
That's what's great about that.
But what's the downside?
Well, the downside is they're taxable.
Okay.
So,
Unlike a 401k.
right, unlike a 401k where you get a tax break
Yeah.
right up front,
Okay.
with a brokerage account, you're going to owe taxes
Mm.
when you sell those investments
Yeah.
on any profit you make.
Okay.
And even dividends, which are kind of like passive income.
Yeah.
Uncle Sam wants a piece of that.
Okay, so the tax thing,
Yeah.
that's always a little confusing.
Taxes are never fun.
But so when does it actually make sense to have a brokerage account?
So it makes sense if you're,
Mm-hmm.
if you're saving for something that maybe isn't retirement.
Okay.
Maybe you're saving for a house
Yeah.
or you're saving for
A boat
a boat. Yeah, exactly.
or a trip or something.
Or a trip. Yeah, something fun.
Okay.
And it's in a shorter time frame.
Yeah,
So,
more short term.
yeah, that's when a brokerage account would make sense.
So brokerage account's flexible,
Yes.
but watch out for those taxes.
Exactly.
Okay. Now what about these retirement accounts?
Okay.
The 401k.
Yes. So those are
Typically
two. Yeah. Employer sponsored.
Okay, employer sponsored.
Yeah.
So tell me about those.
So 401k, they come with some really cool perks.
Okay.
And one of the best ones is the employer match.
Okay, what's that?
Employer match. Okay, so
Break it down.
it's basically free money.
What?
It's free money for retirement.
What do you mean?
I mean, so your employer
Okay.
will actually contribute money
Mm-hmm.
to your account
Okay.
based on how much you put in. So, for example, let's say your company will match 50%
Okay.
of your contributions up to 6% of your salary.
Mm-hmm.
So if you put in 6%,
Mm-hmm.
they're going to give you another 3%.
Wow, that's
It's free money.
amazing.
It's amazing.
Okay, so
Thank-
huge benefit.
Free money. I'm listening.
Right.
Okay, so
So that's a big perk.
anything else good about 401k? Or are we done with the perks?
There's more.
Okay, good.
There are tax benefits.
Okay.
So the money that you contribute is usually tax deductible, meaning it lowers your taxable income now, and then the earnings grow tax deferred.
Okay.
So you're not paying taxes on them until retirement.
So you're saving money now.
Right.
And you're hopefully having a nice chunk of change later.
Exactly.
Okay. But there's got to be some downside, right?
Well, there are some limitations.
Okay.
First of all, there are contribution limits.
Okay.
You can't just put everything in there.
You can't put your whole paycheck in there.
Okay.
Sadly.
Darn.
There are also penalties for withdrawing early.
Okay. Makes sense.
Before retirement age.
Yeah.
And sometimes your investment choices within a 401k might be limited to a list that your employer chooses.
So you don't get complete control over it.
Right. Not always, no.
Okay, that makes sense.
Yeah.
So there's some trade-offs.
There always are.
But it sounds like there's some really
there's some big benefits.
Big benefits to these.
Absolutely.
Especially that employer matching.
Right.
But what if you don't work for a company that offers one of these?
That's a good question.
Or say you're self-employed.
Yeah.
What then?
That's when you would look at an IRA.
Okay.
Which is an individual retirement account.
Individual retirement account. Okay.
So that gives you a way to save for retirement. No matter what your employment situation is, you don't have to be tied to a specific company.
So it's flexible.
It is very flexible. Yeah.
Okay, so tell me about these IRAs.
Okay, so
are they all the same?
They're not all the same.
Okay.
There are two main types.
Okay.
The traditional IRA and the Roth IRA.
Okay, so traditional, Roth, what's the difference?
Okay, so with the traditional IRA, you might be able to deduct your contributions.
Okay.
Right off your taxes now.
Okay, so that's a benefit.
That's a big benefit.
Yeah.
However, you will pay taxes on it in retirement.
Oh.
So it's like delaying those taxes till later.
Okay.
Yeah, with a Roth IRA, it's the opposite.
Okay.
You contribute after-tax dollars, meaning you don't get the deduction now.
Okay.
But here's the really cool part.
Okay.
Qualified withdrawals in retirement are tax-free.
Oh, wow.
Yeah.
Oh.
Okay, so...
Isn't that great?
Sounds like.
Traditional Roth?
Yeah.
Kind of depends on whether you think your taxes are going to be higher now or later.
It's all about planning ahead.
Okay.
And figuring out what's best for your situation.
So those are IRAs.
Yes.
And
very flexible.
Flexible, but there's two kinds to think about. Anything else about these?
They do.
Yeah.
Like the employer-sponsored plans.
Okay.
They do have some rules and limitations.
Okay.
So, for example, there are contribution limits.
Okay.
And there might be eligibility requirements.
Yeah.
Based on your income.
Gotcha.
So it's good to do your research and talk to a financial advisor if you have questions.
Okay, so we've talked about these three main account types.
Yes.
Brokerage, employer-sponsored plans, and IRAs.
Yep.
That's a lot to think about.
It is.
But how do you actually go from I have a goal to I have an account open? How does that process actually work? What are the steps?
So once you know what kind of account you want, it's time to actually open it.
Okay, so how do I actually do that?
Well, if it's like a 401k, that's usually done through work, right?
Okay, so I would talk to my HR department.
Exactly.
Okay.
They'll have all the paperwork.
Yeah.
But if it's an IRA or a brokerage account, you get to choose.
Okay, so how do I choose? Are all brokerage firms the same?
That's a good question.
Yeah.
They are not all the same.
Okay, so what should I be looking for?
Well, one of the biggest things is fees.
Okay.
Fees can eat into your returns.
Yeah, I can see that.
Big time.
Yeah, so low fees is good.
Low fees are key.
Okay.
Yeah, think about it.
Yeah.
You invest $10,000.
Okay.
And you earn 7% a year.
Yeah.
Over 30 years.
Yeah.
That grows to over $76,000.
Wow, that's awesome.
Right.
Yeah.
But if you're paying a 1% fee, you could lose $20,000 of that.
Oh, wow.
Oh.
Okay, so
fees are a big deal.
Fees matter.
Yes.
What else? Besides fees, what am I looking at?
You also want to think about what kind of investments you want.
Okay.
And make sure that the institution offers those.
Okay.
Some platforms have more options than others.
Yeah, that makes sense.
And think about the user experience, too.
What does that mean?
Is the platform easy to use?
Okay.
Do they have good customer service?
Yeah, if I need help.
Yeah, all that stuff matters.
Okay, so it's kind of like choosing a bank.
Yeah, exactly.
Okay, so I've done my research.
Uh-huh.
I found a provider. I've opened my account.
Okay.
Now, how much money do I actually need to start investing?
That's the question everyone asks.
Yeah, because I feel like you need like thousands of dollars.
Yeah, a lot of people think that.
Yeah.
But the truth is, you can start small.
Okay.
The key is to be consistent.
Okay, so like what's a reasonable amount to start with?
So if you have a 401k with an employer match, try to contribute enough to get that full match.
Right.
Remember, that's free money.
Free money, yes.
Even if it's a small percentage of your paycheck.
Okay.
It's a great start.
Okay, so what about for an IRA or a brokerage account?
Start with what you're comfortable with.
Okay.
Even $50 or $100 a month.
Okay.
It all adds up over time.
All right, so small, consistent steps.
Exactly.
Now, our source mentions recurring contributions.
Yes.
What is that?
So that's like setting up automatic transfers.
Yeah, okay.
From your checking account.
To my investment account.
Exactly.
So it's like automating the process.
Yeah, it's putting it on autopilot.
Okay, so what's so good about that?
Well, first of all, it's convenient. You don't have to think about it.
Okay.
But it's also a smart strategy.
How so?
It's called dollar cost averaging.
Okay,
So let me explain.
Okay.
Imagine you have $1,200 to invest.
Okay.
And you put it all in at once.
Okay.
What if the market is high that day?
Yeah, not good.
Right, you're buying high.
Okay.
But with dollar cost averaging, you spread it out.
Okay.
So maybe you invest $100 every month.
Okay.
For a year. Some months you buy high, some months you buy low.
So it averages out.
It averages out.
Okay. So you're not trying to time the market?
Exactly.
Which I've heard is impossible.
It is pretty much impossible.
Okay, so recurring contributions, dollar cost averaging.
Yeah.
Got it.
Two great tools.
Okay, now let's talk about the investments themselves.
Okay.
So there's so many options.
There are.
How do I choose?
It can be overwhelming.
It is.
But our sources talk about building a balanced portfolio.
Okay.
Like a balanced diet.
What do you mean?
So just like you wouldn't eat pizza every day.
No, although that sounds good.
It does sound good.
Yeah.
But you need a variety of foods.
To be healthy.
Right, for a healthy diet.
Okay.
Same thing with your portfolio.
Okay, so different investments are like different food groups. Okay, so what are the food groups?
Well, our source talks about individual stocks and bonds.
Okay.
Mutual funds and ETFs.
Okay.
And robo-advisors.
Okay, cool.
Yeah.
Let's break it down.
Okay.
So individual stocks and bonds.
All right, so with those, you have a lot of control.
Okay.
You're choosing specific companies that you want to invest in.
So I have to do my research.
Yeah, you have to do your research.
Okay.
You have to be comfortable with taking on that responsibility.
Okay, so maybe not for a beginner.
Yeah, it can be a lot for a beginner.
Yeah, okay, what about mutual funds and ETFs?
Okay, so those are like pre-made meals.
What do you mean?
So they pool money from lots of investors to buy a bunch of different assets.
So it's already diversified.
Exactly.
Okay.
So you don't have to pick individual stocks.
Okay, so that's easier.
Yeah, a lot easier.
So what's the difference between a mutual fund and an ETF?
Okay, so the main difference is how they're managed.
Oh.
So a mutual fund is usually actively managed.
What does that mean?
It means there's a fund manager who's making decisions.
About what to buy and sell?
Yeah, they're trying to beat the market.
Okay.
So they charge higher fees.
Okay, so you're paying for their expertise.
Exactly.
Okay. What about ETFs?
So ETFs are usually passively managed.
Okay, what's that?
It means they track an index.
Like the S&P 500?
Yeah, the S&P 500.
Okay.
So they're not trying to beat the market.
Yeah.
They're just trying to match it.
Okay.
And because of that, they have lower fees.
Okay, so lower fees is good.
Always good.
Okay, so we talked about stocks and bonds, mutual funds and ETFs. What about robo-advisors?
Oh, yeah, robo-advisors.
What are those?
So those are like
Okay.
Having a virtual financial advisor.
Okay.
They use algorithms and technology to build and manage your portfolio for you.
Okay, so I don't have to do anything.
Pretty much.
Okay, so who are these good for?
They're really good for beginners.
Okay.
Or people who don't want to be hands-on.
Okay, that makes sense.
Yeah.
So we've got all these options. How do I choose?
So it comes back to your goals.
Okay.
Your risk tolerance and how much you want to be involved.
Okay, so if I'm saving for retirement,
yeah,
like 30 years down the road,
yeah,
I'm comfortable with some risk.
Okay.
Maybe I go for a more aggressive portfolio.
Yeah, maybe you tilt towards stocks.
Okay, what about someone saving for a down payment?
Okay, so that's a shorter time frame.
Yeah, just a few years.
Yeah, so they might want to be more conservative.
Okay.
Maybe focus more on bonds.
Okay. So it's like figuring out
it's all about
what kind of exercise.
Just matching.
Yeah.
Yeah, matching your investment.
To reach my goals.
Exactly.
Okay, so I've done all this.
You've done your research.
Yeah, I picked my account.
Uh-huh.
Picked my investments. Am I done?
Not quite.
What else is there?
So investing, it's not a set it and forget it thing.
Okay.
It's a long-term journey.
Okay.
It requires some attention.
So like what kind of attention are we talking?
So you want to regularly review your investments.
Okay.
And make sure they're still aligned with your goals.
Oh, okay.
Because things change.
Life changes?
Life changes.
Okay.
Your goals might change.
Yeah.
The market changes.
Okay, so what am I looking for when I'm reviewing?
Okay, so first of all, check in with yourself.
Okay.
Have your goals changed?
Okay.
Maybe you got a promotion.
Okay.
And you can contribute more to your 401k.
Okay, that's good.
Or maybe you're starting a family.
Okay.
And you want to open an IRA.
Okay, so think about life changes.
Yes, exactly.
Okay, what else?
You also want to look at your investment mix.
Okay.
Is it still right for your risk tolerance?
Okay.
And your time frame?
Yeah, because maybe I'm more comfortable with risk now than I was a few years ago.
Yeah, that happens. You learn and you grow.
Okay, so rebalance if you need to.
Yes, rebalancing is important.
Okay, what else?
And finally, you want to make sure you're on track to reach your goals.
Yeah.
So are you saving enough for retirement?
Okay.
Or for that down payment?
Okay, so it's like checking the map on a road trip.
Yes.
Making sure you're going the right way.
You got it.
Okay.
And sometimes it helps to have a co-pilot.
What do you mean?
Like a financial advisor.
Oh, okay.
Yeah.
Okay, so...
They can give you personalized advice.
Yeah.
And help you create a plan.
Okay, so maybe that's something to think about.
Yeah, for sure.
So even if
you work with an advisor, it's good to educate yourself.
Yeah, knowledge is power.
Exactly.
Okay, so even if this feels overwhelming, just remember, starting is the most important thing.
Starting is key.
Yeah, you don't have to be perfect.
No.
Just start.
Just take that first step.
Okay, it's like, don't let perfection be the enemy of good.
Right, exactly.
We've covered so much
about
investing.
Yeah, it's a lot.
So much to think about.
Yeah.
But we started with that why. And I think that's so important.
It is.
Like that really sets the stage
Absolutely
for everything else.
Yeah, it's the foundation.
And then we talked about all those different accounts, like brokerage accounts, 401ks, IRAs, traditional versus Roth.
Right. So many options.
So many options.
Yeah.
And then all those different investment types.
Stocks, bonds.
Yeah, individual stocks and bonds.
Mutual funds, ETFs.
Robo-advisors.
Robo-advisors, yeah.
I mean, that's a lot.
It is.
But I feel like we've broken it down
hopefully
into some manageable steps.
Yeah. It's all about making it feel less overwhelming.
Yeah, because I think that's what keeps people from actually getting started.
Yeah, the fear of the unknown.
Yeah.
It's a big hurdle.
So you're listening out there. What's your next step?
Yeah, what are you going to do now?
Like, what's the one thing?
Yeah, what's the first thing
you can do to get started?
So think about those investment options we talked about.
Yeah.
Are you going to open a brokerage account?
Yeah.
Maybe dabble in some individual stocks? Or are you going to max out your 401k?
Yeah.
Get that employer match?
Free money.
Free money.
What about an IRA?
Yeah, maybe an IRA is the right fit for you.
Traditional or Roth?
Right, you got to decide.
Or maybe you're like, you know what? Robo-advisor, take the wheel.
Yeah, hands off.
It's pissy. Exactly.
So it really just comes down to what are your goals and how much risk you're comfortable with.
Yeah, it's a personal decision.
But remember, investing is a journey.
It is.
So keep learning.
Keep researching.
Keep asking questions.
Ask those questions. And don't be afraid to seek out help.
Absolutely.
If you need it.
There are resources available.
So that's it.
That's a wrap.
For this deep dive into investing.
We covered a lot.
Yeah.
But hopefully you feel a little bit more confident.
Yeah, a little less overwhelmed.
Yeah, exactly.
A little more empowered.
That's the goal.
To get started.
Yes.
And start building that financial future.
Build that future.
So thanks for joining us.
Thanks for listening.
And happy investing, everyone.
Happy investing.